I will now be speaking about the external sector. India's current account deficit CAD moderated to 0.6% of GDP last year in 2024-25 from 0.7% of GDP in 2023-24. And I want to underline over here that it is not only in percentage terms as a proportion of GDP that it decreased by about 0.1% because of the expansion in GDP, but also because of a decrease in absolute terms of CAD by about $3 billion US dollars from $26 billion to $23 billion. And this is on account of robust services exports and strong remittances receipts. Despite a higher merchandise trade deficit, we have been recording, as you are aware, a high growth rate of about 17% in services exports in the last 4 years, and about 14% compounded annual growth rate of remittance receipts in the last 4 years ending 2024-25. This has made up more than for the higher merchandise trade deficit that we had last year. The merchandise trade deficit further widened in Q1 of 25-26. India's share in world services exports has risen markedly from about 2% in 2005 to 4.3% in 2024, driven by strong software and business services exports. Robust services exports coupled with strong remittance receipts are expected to keep the CAD within sustainable level even during the current financial year. On the external financing side, gross FDI to India remained strong during April to May 2025-26 this year. However, net FDI moderated during this period due to higher outward FDI. FPI inflows to emerging markets and economies have remained strong in May and June 2025. However, net FPI to India recorded outflows of 0.8 billion US dollars this year so far till July 31. This is mostly on account of outflows in the debt segment. External commercial borrowings, on the other hand, witnessed higher net inflows compared to that last year. Inflows under non-resident deposits too remained positive, albeit witnessing some moderation. As on 1st August 2025, India's foreign exchange reserves stood at a robust $688.9 billion, sufficient to cover more than 11 months of our merchandise imports. Overall, India's external sector continues to remain resilient. We remain confident of meeting our external financial requirements comfortably.